Good afternoon, Premium Gang. How's everybody doing today? Hope you guys are enjoying your Monday, June 29th. So far, it's been an absolutely beautiful day here in Atlanta. Walked 3.5 miles this morning. We're supposed to have 30 to 40% chance of rain, but I'm looking out my window right now. There's not a cloud in the sky, so hopefully that continues. Let me bring up comments. There we go. Says there's one of you in here already, so whoever that is, hello. We're going to keep it short and sweet today. We'll kind of see what we're going to get out of ES here, and we'll kind of go over what it's done today. And it's 2 o'clock. We'll wait just a minute or so. Right here's the current candle, the new candle. Last candle ended up in a spinning top with a slightly longer top wick or topping tail. But as we can see right now, this is trying to push green. I've got an alert set here. It would obviously have to break the top of this wick to continue higher. My first kind of area that I would look at would be 3044. And then if it could get through that area, let me come back over here. Okay, so I'm going to kind of show you. So that's the bottom of this wick right here. So if we carried that across, that's the 3044. If it could get through this area right in here, it's got a good chance to get up here to 3060, which would be the start of this drop base drop supply zone. So let me do this. I'm going to squeeze this in just a little bit so we can fit more on the screen here. There we go. I'm going to make it a little bit bigger. Don't want it huge. Okay. So let's just look at what's happened since yesterday when this session started, which would have been right here. So right here was the first candle of today's session. Obviously it starts at 6 p.m. the day before. Created our opening range. We popped up just a little bit, back down into the range, then we broke out, rejected right here at our 3003 resistance level, brought us back down into the range, and then we got the real breakout, which went all the way up here, which was 3021. So when we finally got the real breakout, so that's basically 97, which is 3. So that's about $24. That's about a $24 move up to there when we got the real breakout. Now the first one, okay, this was just a little pop up and we came back down in. Then this one broke out, right? We got up here and that gave you, if I remember right, that was about a $7 or $8 move, but then it retreated again because it rejected right here off of resistance. Then we got the real breakout, which again came all the way up here, which was about $24 to the upside. So then throughout the evening in the pre-market, for the most part, let's see here, till 7:30 from 9:30 last night. So from 9:30 last night till 7:30 today, we ranged down, back up, down, back up, down. Then we finally broke out. Okay, made this little move here. So let's see. Okay, so 1750 to 2650 is $9 move. Doing the math in my head. Okay, so we had a $9 breakout right there. Then price retreated. Okay, here was our opening candle on the day. So when price came back, okay, first candle, remember, always an animal of its own. What did we do? We got this big flush to the downside. So this candle alone, give me 1 second, 12, 28, $28 candle. This was a $28 candle to open the day. Okay, did we have any clues? Well, of course we did, right? So look at what the momentum was doing. Momentum was heading to the downside. All right, and then right here's where we bottomed out. Then we got this bounce. And if we look over here to the left, where did it bounce? It bounced right in the overnight opening range. Okay, so if I draw this across, it was right here at the bottom of these two candles, which were in the overnight opening range. Buyers came back in, pushed price up strong, right? All the way up to here so far. Now it looks like it may be trying to pull back, right? If it clears this and maybe even this, we might start to look for a potential retreat down here to the 302825 or maybe down to the 20 SMA. Okay, so we're going to keep an eye on this as well. Okay, but this was a strong move. So again, from 2988.50 all the way up here to a high of 3040. Okay, so 1150, 51.50, $51.50 from the low of day to the high of day. Pretty good, right? Pretty good. Now it looks like we're starting to potentially be running out of steam. And will this just come down maybe, down here, right around our support level? Will it come all the way back down to the 20? Or is there any kind of catalyst that might push it all the way back down to opening price level or lower? Okay, now price, let's look at this real quick. You see this right here? If I come up here, maybe draw a box around it. Okay, price has actually, let's see if I can get it to work. Price has actually been ranging and flat. You see this? Okay, even if we come straight up on this candle here, even though we're still working our way up, look at the momentum. The momentum was totally flat. Hey Kelsey, good to have you, and you're absolutely welcome. Pleasure to be able to do these for you guys. Okay, so going clear back to the 1030 candle, look at this. Okay, momentum totally flat. Price still been climbing up, but look at how the candles have been getting smaller and smaller. See this right through here? Now it's trying, it's got to get below this wick here. It's trying to do a little fade, possibly a little rollover, but we're going to watch, we'll watch and see, see what happens. Excuse me. This opening candle, right? Sort of a hammer-like structure. It's not your classic hammer. It's got a little wick here. This is probably not 2.5 to 3 times the size of that body. Okay, came back up, came back down. Excuse me, it flushed all the way down, and then this is where it came back up to. Then we got some strength right here, and you can look at the momentum. Very strong momentum to the upside. So this was a nice candle, came back in, went right up to this pivot. Okay, this is a nice pivot right here. Okay, and that's right where it went up to. See that? Pulled back just a little bit, regained some strength, right? Probably some people taking profits after this nice strong move. Okay, so get that little rest, pushed up again. And now let me see here. I'm going to squeeze this in a little bit. Okay. So it pushed up. Okay, no real reason that it should have stopped there other than, right, sellers saying, hey, I don't want this to go higher. They can step in anytime. And we did just cross a resistance level here at 30285. They pushed it back down a little bit further, got their footing, kind of based here a little bit, pushed up just a little bit, then we based again with this little spike to the top side, and then right now it looks like they're trying to fade it, but we're going to see what they do. Okay, again, they got to get below here. That's their first step. That would be 3031.50. Not something I'm interested in right now. Okay, it's been a decent day, right? I've been putting my little summaries in there so you guys can see. Nothing to write home about. Positive, but you know, I bet you on the day I'm slightly above 50% with no real huge winners. I think I had that one for 2 something, maybe 287 or whatever it was. Not like a couple of those days I had last week, but those were great days, and that's what I try to keep telling everybody is you kind of got to pick your spots, right? Now I also have other things going on, so I've been kind of preoccupied with some other things as well. So that's also kind of led into, you know, certain days I don't trade as much, other days I trade quite a bit. But couple days, the price action was just really good. There was that one day that I showed everybody, and we did the live stream about it. To me, the price action was just super easy to read that day. Okay, that's let's come back over here. Okay, that was this day right here. Okay, when we got this after this strong move up. Okay, so that day to me it was just really easy to read. So it took some good trades that day. Today, it's been okay, right? It's been okay. I did not, I don't think I caught any of this. I'm trying to remember now, but I did catch some on the way back up, but I also got stopped out a couple of times. So I got stopped out a couple of times, and I got a couple of winners. Then we kind of went into this period, which is not the best to trade, right? Not the best to trade. Tried to go long right here. Okay, see this? Okay, I tried to go long right there because I felt like if we could break above here, okay, it kind of went down and it was coming back up through. I kind of felt like if we could break above here, we could get up to at least 3044, which is up here, up in this range. Okay, but it just barely poked its head above, came back down, stopped me out. But I'd moved my stops up, so didn't lose anything. Just didn't really make anything. Then we came over here, it took a little peek down, tried to move up, then we tried it again right here. And I tried it again as well. I stopped out again. So I tried to get it right here as it was breaking, and again I was looking for 3044. It poked up, went as high as 3040. I was at the most, I was right around $200 in profit, but I did not move my stops real close because I was trying to give it room that if it waffled a little bit, it could maybe take that pop, but it eventually retreated back down and stopped me out for a little bit of profit. I think it was, maybe one of them was $25 and the other was like $12.50, something like that. So I'm probably, unless I see something that just blows me away, I'm probably pretty much done. Let's see here. Oh, yep, seeing your comments, Kelsey. Yes, it was that day, right. It was that day that you got stopped out and then you missed the big move. And yep, that's the same trade I took. Okay, so that's good. I mean, you guys are starting to see some of the same things that I am. And, you know, again, they're not always going to work out. The key is trade management, right? Risk management, trade management, you can call it whatever you want. I put a comment in the room there earlier. Okay, whether I'm right or wrong, I just don't want that trade to come back against me. So my stop outs have been like break even, $25, $12.50, you know, right around there. Not the ones this morning. The ones this morning, it was happening a little bit quicker. One of them was $62.50, and I can't remember. They're in the room, but they weren't huge, right? They were all controlled. My winners have been bigger than my losers. My stops have been very, very controlled. So even though you see this right here, this is tough. That's tough to trade through there. But you don't know it ahead of time, right? At one time, this is a pretty solidly green candle until it gets right up here and then pushes back down. Now, if I wanted to be a little bit more, even more conservative, I could have just, you know, I have a button for my trades that just says exit all. I could have just, right when it was at 200, I could just exit out, okay? I was trying, I'm up on the day. I have no risk. I already had my stop set at break even or slightly into profitability. I was trying to catch, you know, up to around 30.44, okay? Which would have made me $500-ish, something like that. So that's what I was hoping for, but it didn't happen. Came back against me and stopped me out, but not for a loss. So that's the key. That is the key. Okay. Kelsey, 2 stops, $10.14. Yep. We don't ever want to hope, right? I seen your comment there, hope. I have to sometimes remind myself too. You try to get that out of your vocabulary as a trader. I was hoping it was going to do this, or I'm hoping it's going to do that. Traders shouldn't use the word hope. We should, me included. I'm saying me included. We should all get that out of our vocabulary. So again, you can see right now, price has been up, been down. Right now, it's like a spinning top. Got a little less than 14 minutes to go on this candle. Let's look. Momentum's still flat. See this down here? Momentum is still flat. So we're not getting any like early signals one way or the other. Every once in a while, we'll get them. Okay, I've showed you on previous live streams before a move will happen. You know, you might see this start to curve up, even though this really hasn't went green yet, or vice versa. You might see it start to curve down before you start to see red. Okay, when you see those kind of things, again, it's not that, oh, I see that, I should jump into the trade right now. That's just another factor. Put it together with your other price action, support and resistance, supply and demand, put it all together, and then make a good decision, right? And make good entries. Don't just guess, right? Because I wouldn't want to enter right now. See this? That'd be the worst place to enter. Okay, so I'm just making up a hypothetical. Let's say this just started to curl up all of a sudden, even though this isn't green yet. Okay, I don't want to enter now, right? I could enter here and it just comes right up to here, and then all of a sudden it starts flushing down, and I either get stopped out or I lose a little bit of money. Okay, because that means the recent behavior of the buyers or sellers is changing the momentum. It could, right? It could. Right now, we know for quite a while, going back to about 10:30 this morning, the momentum has been flat. That's why I drew the box around there. Just basically moving sideways, right? Not up, not down. This was a strong move up right here. Okay, this was a pretty controlled move to the downside, borderline strong. That's why we got this. Okay, that's why we got this move. But since about 10:30, just right across here, we're just doing this, right? Just like ripples, just ripples, but we're basically going sideways. We're not going up or down. So right now, I'm pretty much, unless, like I said, unless something drastically changes, I'm probably done for the day. I don't think there's any reason to, try to outguess the market. Excuse me. Oh, yawn in there. Excuse me. Will the market break strong one way or the other? Could. Okay, we see the 200 and the 20 are starting to come back together. You see this? They were widening. If I come back this way, okay, see, let me come all the way back here. Whoops, there we go, almost went too far. Okay, see how close they were together back here. Then they started to widen. See how they're getting further and further apart? Right here is like where they're really far apart. Then the 20, okay, the 20 sort of went into a flat phase, and now the 20's going up and the 200's coming down, right? And we know that means what? It means there's going to be energy building if they keep coming and then they come all the way back together or get real close to each other. That might not happen here in the next hour and a half, couple hours. That could happen overnight. It could happen tomorrow morning. But if they come all the way back and converge, that's a building of energy, and then we would start looking for signs of it popping one direction or the other, up or down. So just keep that in mind. But right now, right through here, not the best to trade. Okay, spinning top, spinning top, spinning top, spinning top, and you can see, you know, poke up a little bit, poke down a little bit, poke up a little bit, poke up and down, right? Hard to trade. Unless you're really, really good with your risk management, you probably end up losing a little bit. If you're really, really good, best case scenario, you break even or make, you know, $12.50, $25, something like that, which is better than red. But even if you're small red through something like that, you're doing pretty good, even if you're small red. Okay, so meaning you got stopped out and maybe you lost, you know, $12.50 here, or if you're playing SPY or something, you might be losing just a few dollars, and that's fine, right? You should celebrate small losses. Okay, small losses. You guys have probably all seen the little meme every once in a while, different trading people, trading gurus, and that will float it around on Twitter. It says there are only 3 trades that should ever be in any trader's portfolio: small losses, small wins, big wins. Those are the only trades that you should ever have, right? Break even, you could kind of put in small losses or small wins, however you want to look at it. I look at it as a small win if you break even. Technically, you're losing because you're going to have maybe some commissions or fees come out of that. But to break even to me is like a small win. But you should never have big losses. Now I say that, and I even occasionally have them, right? Let me see here. Grayson and I were talking. We have a private room that we sometimes chat in. And he was asking me, you know, why don't you, you know, you had a couple of big days last week. You know, why don't you just really, really concentrate on those? And you know, I was telling him those are harder than you think. Even on those days where it's really easy to read, okay, that's one day out of a whole week. Okay, one of the other days I had that was pretty good was actually a pretty difficult day. I just found the right setups and the right triggers on a pretty choppy day. Okay, and again, that's fairly rare. So, but what you got to do is just try to learn to be consistent. Make consistent small wins every day or almost every day, and that's the best thing. And then you'll occasionally get those bigger days, right? You'll occasionally get those bigger days. Now, one of the reasons I ran that little survey over the weekend, I kind of wanted to see, you know, the size account that everybody's trading with, and it was about what we anticipated, right? There was mostly 2s and 3s that came up, which means most people are trading with a smaller or small-ish account. So it was 500 or less. There was several people trading that. It was 501 to 2,500. There was a lot of people trading that. 2,501 to 10,000. There was a lot of people trading that. In fact, I think that was the most popular one. And then 10,001 or over, there was a few people trading that. So the majority of people in our room, which we kind of anticipated, trade with a smaller or small-ish account. So one of the things when you have an account, let's just say 5,000 or less, okay, 5,000 or less, you want to be very cautious, right? You want to be very cautious because depending on where you came from, if you started with a 500 account and you've built it up to 5,000, you might think, man, that's all the money in the world and this is awesome and now I got all kinds of money to play with. No, you should actually be tightening it up. right? You'll be more aggressive with a smaller account. The bigger your account gets, the less aggressive you should be. Because what happens, I've been there, and I know, again, this is like an old trading adage. Most successful traders, almost all of them, I'd say 99% of them, have blown up accounts on one or multiple occasions. And the very first time they ever had some serious money in their account, or whatever they consider to be serious money, they made rookie novice mistakes, and they end up losing most of it or all of it, because your mindset starts to change and you start to get comfortable thinking, oh, now I got a whole bunch of money, I've got a cushion, I can be riskier, I can take more chances. Nothing could be further from the truth. It should be exactly the opposite. You should be protecting that money that you've built, and you should be even more cautious. You will be slightly more aggressive when you have a real small account. The bigger that account grows, right, the percentage of your risk should get smaller and smaller and smaller. I hope that makes sense to everybody. All right, let me read some stuff here. Okay. Kelsey, another question. This morning before 10:30 a.m., I didn't take any trades because I didn't feel comfortable with them or see a good setup. Was there any trade that I should have taken? The answer to that would be no, because you've already answered it. If you weren't comfortable, you shouldn't trade. It doesn't matter what I say, or if somebody else says, well, I saw this setup, or I saw that setup, or whatever. If you didn't feel comfortable, you shouldn't trade. If I don't feel comfortable, like I said, right now, I don't feel real great about what I see here. Now, this may do exactly what I said. It may come here, or it may even come down here, but still, just what I've viewed here. Okay, look, look at it starting to fall here. See this, the momentum? Okay, but I didn't feel real great about that. And I've got stopped out, even though it wasn't for losses. I've got stopped out several times this afternoon. So, you know what? I'm good. I don't want to risk it. I don't want to jump in, and all of a sudden this thing bounces and starts going that way, and I get stopped out again. Okay, I don't need that. Not right now. But anyway, just to finish up that thought, if you do start building an account, if you have a smaller account and you start to build it, your percentage of risk should get smaller and smaller. Now, the amount of money that you can put into a trade will be bigger and bigger, but the percentage of risk should get smaller and smaller. I hope that makes sense to everybody. All right, so if you have a $200 account, you may have to risk 50% at the beginning, right? $100. So you're risking, meaning you have $100 in the trade. You're not truly risking 100, but you have 100 at risk. It's called exposure, right? Your actual risk may be $10, okay? Which is still the percentage of 200, that's 5%, which is still kind of high. Right? Because if you had a $20,000 account, you would never be risking 5% of it for your stop. Right? You'd never put 10,000 of your $20,000 account into one trade. That doesn't make sense. So follow me. Now, if you grew that $200 account to a $2,000 account, right? You're not going to trade 1,000 and risk, whatever. You're going to trade maybe 500 of it, and now your risk is maybe going to be 2 to 2.5%, meaning where you're going to place your stop. So what is that? 40 to 50 bucks, right? Now, if you grow that 2,000 to 10,000, it's the same kind of thing. You're not going to risk as much per trade from a percentage standpoint, but because your account's growing, the number will get bigger, but it'll be a smaller percentage of your overall account. I know a lot of guys who have large accounts, pro traders, they kind of have numbers, and they'll never risk more than 20 to 25% of their overall account in any day. Not talking about one trade, so you got to follow me on this. So let's just say they have 100 grand. their rule might say, I'm never going to have more than 20 to 25,000 exposed at any one time in any one day. Then they take that number, whatever it is, let's just say it's 25,000, okay? Say it's 25,000. They'll take that and they'll say no individual trade will be more than 5,000 bucks exposed. So out of that 25 grand, that's the max that they could ever have exposed in one day by their rules. They'll divide that into 5. So they could take 5 trades at $5,000 each. And then they'll never risk any more than 2% on any given trade, meaning where they place their stop. So what is 2% of 100,000? I think it's what, a couple $100, right? Okay, so that would be their risk. So they might have 5,000 exposed on a trade, but their stop would be at like 200. So I hope that makes sense. And you guys see how as that account grows, their trade size will get bigger organically, but their percentage of exposure and risk gets smaller. Okay. Kelsey says, I've been reading Trading in the Zone over and over again. The book mentions something called invisible opportunity, how when you have more experience, you see more opportunities, vice versa. Yeah, I would say that's true. I mean, again, when somebody has more experience, like a lot of times I'll draw stuff in for you guys that when I'm trading, I never draw in. It's only because my eye has become, or my eyes, but I always say eye, has become trained to see certain things. So when I see a certain pattern developing or a contracting range or an expanding range, whatever the case may be, I don't always draw them in. I mean, for me, I'll draw them in for you if I think it's helpful, but that only comes through experience. So you do start to see more opportunity, right? It just starts to inevitably happen through experience, through looking at charts every day, through trading. And what I would say, like I'm one of these people, I am not against people who like to paper trade, especially if you're inexperienced. I think paper trading a lot, the main benefit of that, I want you to follow me because there is drawbacks, but the main benefit of paper trading a lot, if you're a novice, is it starts to teach you what to look for on the charts. You start to see good setups and triggers and patterns and ranges and all of that kind of stuff. And that only comes through practice. The only negative about paper trading is it's not real money, and so you're not truly attached to it. Because if it goes wrong, you don't care. It didn't really hurt you. When it's real money, even if it's a smaller amount, okay, it kind of tugs at you, right? If it goes against you, if you lose it, it stings a little bit because it's real. That's a psychological thing, and that only comes through trading real money. But if you're somebody who's just starting out and you're just learning, I don't think there's anything wrong with paper trading and doing it a lot, trading a lot, okay? Because you don't have any risk and you'll get into the habit of reading charts and looking for opportunities. I hope that makes sense. All right, so let's come back over here. Okay, so we got this downside move. We're starting a new candle. This is the 230 candle. We'll see if we can get some continuation. I told you before, if we broke this, first target was going to be 302825. Next target would, if you get a break and hold of this, would be the 20, right? Which is also in this wick right here. Okay, so you're always looking for your obstacles. Always looking for your obstacles. Would the break of that 30-minute hammer be a trade you'd take? Let's see. Are you talking about this one right here? Is this the one you're talking about, Kelsey? Because, yeah, absolutely. Absolutely, that's a trade you could take. And it would have worked out nice, see? Once it broke, it went up, it came back, but it never would have got anywhere near where your stop would have been. Okay, and then it went higher all the way up to here. Yeah, that's absolutely, and this is an opening candle, right? So it created an opening range. I don't have it drawn in. Let me draw it in for you. Okay, so if you're just playing opening range breakouts, there it was right there. It never even came all the way back. Broke out, just came back to here, over, up to here, then it came back. I probably would have been looking at exiting either here or just below here, just from a conservative standpoint. But absolutely, that's a trade that you could have taken. Yep, for sure. All right, so just looking at this here, we're going to see if it does anything. Let's see, I thought about taking that trade, but price had popped so quickly. Price was at 30.20, conservative target was 30.28, and it seemed like the risk to reward wasn't there. Yep, again, if you don't feel comfortable, then you just don't take the trade. That's the right thing to do. Okay, whether it ends up working out or not, trust me, I have missed huge trades before because I'm pretty conservative, right? But I've also missed huge potential losses before because I'm conservative, right? I'd rather make the steady, small, safer play over and over and over again. You're going to come out better in the long run, right? So, yes, and it is. That's exactly what it is. It's a mindset. You have to like reconstruct your mind to think that way, because everybody inherently has FOMO, and they're always worried that they're going to miss out on the next big move. You know what? The majority of people miss out on the next big move. I mean, it's just the law of the numbers. Most people miss out on the big move, even when they're trying to look for them, right? You know why? It's hard to predict when the next big move is going to come. Okay, it could. Now there are ways. Obviously, we teach how there are ways to have a good idea when it's possible for it to happen. But a lot of times an unexpected news event is going to create some huge move that's only going to be temporary. Even a regularly scheduled news event, if you get really, really good news or really, really bad news, right? That can cause a big move. But more people miss the big moves than catch them. So just knowing that the law of averages is against you, why wouldn't you always be trying to take that smaller, safe play over and over again? And I call it piling them up. Just pile them up, right? Pile, pile, pile. Whoop, small stop out loss. Pile, pile, pile. Small stop out loss. Pile, pile, pile. You just keep piling them up. You're not going to win every trade. Right? You don't have to win every trade. We talk about that all the time. Even if you're 50%, if you're at least winning 2-1, right, or 3-1, you're going to be making money every 10 trades. You can even be 30 or 40% and still be making money if your risk to reward, or reward to risk, as I like to say, is strong. Okay. All right, so we see right now we're just kind of pausing, whether that is because, again, if you look here, we're still not out of this little box. We started down, but now it's leveling out again. But until we kind of break out of that one way or the other, this can be just more of this chop. Maybe they're going to wait until power hour. Maybe they're going to wait until the last 15 to 30 minutes. Then maybe they're going to try to make a move. And again, you can see the 20 is still coming up, the 200 is still coming down. Okay, Kelsey says, because the probability is that you're going to miss the big moves rather than catch them, so at least when you hit the small moves, you make profits consistently and it builds up. That's 100% correct. That is 100% correct. And if you're doing the right things and you're playing the right setups and triggers, you will occasionally catch those big moves. So that's the added benefit. If you're consistent, conservative, right, and take the smaller high probability plays over and over again, every once in a while you're going to put yourself in position to catch one of those bigger moves. I've used the analogy before, you want to hit singles and doubles, and then occasionally you're going to hit a triple or a home run. That's the way that you win at trading and become consistently profitable. All right. It doesn't look like price is wanting to do much right now, so we'll probably go ahead and wrap this up. We've been on here for about 40 minutes because I got on about 1:59. So hopefully what we kind of covered today helps somebody out there. It tells me there's been 3 of you in here. So, obviously anybody else in the premium gang will be able to watch this. We only have a couple more days, and then obviously we go over and everybody will be in the main room from now on. So that'll be exciting because when we do these live streams, then, our 300 and whatever it is, 330 members in the community will now all be allowed to access these live streams. So hopefully we'll get a bunch of people in here. I've had people messaging me that they're excited, so we'll see. I mean, ever since we've started talking about how we're going to make that little shift, obviously the room has started to grow. There seems to be some excitement, so I know we're excited. Oh, you're quite welcome, Kelsey. Yeah, that's what we're here for. That's what we're trying to do, is just help as many people as we can. This room has never been about trying to develop some sort of I don't even know the right word. I mean, we obviously want to cover our expenses, and that's something I'm still working on. How am I going to be able to do that? I've had a couple of people in the room ask. I've had a couple of people private message me. I mean, we're thinking we might start trying to reach, as the room continues to grow, we might be able to get sponsorships from businesses who want to target our kind of clientele. That's one way. We may set up a voluntary donation button, and if people want to occasionally donate a little bit because they feel like they're getting value, Grayson and I have seen that in other rooms, and it seems to work fairly well in some of these other rooms. I've stumbled across a couple of rooms. Now they have, like, literally, some of them have tens of thousands of members. Another one I'm thinking of, I can't remember exactly how many that guy has, but he's got several thousand. And that's kind of what they do. They do offer some paid services, so that's just a supplement, but they might be doing that to generate like 100% of their income. That's not what we're doing, so just slightly different there. But going back to the donation button, we've seen some that it's amazing, like how many donations they get, and they don't have to, have some other sort of paid service. So that's kind of what we're thinking, is maybe looking for sponsors as we continue to grow, and then maybe like a voluntary donation button. But right now we're just carrying this out of our own pocket, and for the expenses. Can't do that forever, but I'll do it as long as we need to try to grow the room, and then maybe get to a point where I just saw somebody today, I haven't even reached out to them, that has some kind of a sponsorship program, and it says once you have a trading community that's over 350 people. Well, we're right around 330, so we're not that far away. So there could be things like that make sense. So anyway, all right, I hope everybody has a great day. You can see right now, we kind of came back and it's sort of bottoming out here. Okay, and we look down here, we flattened out again. So just like we said, real choppy right in through here. Unless we really get a break up or really start to get a breakdown, I don't think there's much to be had without taking higher risk, and that's not what we're about. So I'll see you guys back in the room. Have an awesome day, and I'll see you tonight, and then I'll see you tomorrow as well. Bye-bye.